Hey everyone, happy Thursday, June 15th. It's about 11:15 on the West Coast and time for another market update. I'm really happy that I'm doing this video on Thursday and not Wednesday or Tuesday because the last couple of days have been really stressful and really frustrating as far as how mortgage rates and the bond market have gone. So luckily today's a little bit better so I can put on a big smile for you guys. So getting into it, really important news full week. On Tuesday, we got the May CPI number, the inflation number, and there was a big drop in the headline number, but the core remains sticky. So let's take a little closer look. So the headline dropped from 4.9 to 4% year over year, core only from 5.5 to 5.3. That kind of didn't give us much gains, but this was as expected. Used cars still it showed it go up 4.4%, and that's a big part of core. And we know that if you look at the car industry, their metrics, they're showing this has already dropped. There's something called the Manheim Index, how they track their pricing, and that tends to be about 2 months ahead of the inflation reports, and that shows it dropping. So at this point, it's still showing up in CPI, but we know in the next month or two, we should start to see that go away. And then the shelter inflation, that's moderating. It's coming down. It was at 8.2 to 8.1 and now to 8%, but it's still a very, very high number. And we know that's really a lot lower than that. So those are things we have to look forward to in the future. A little bit of the glass is half full kind of look at it. The glass half empty look at it is that energy, we had a big gain from energy dropping. Maybe that goes up in the future. And then just the fact that cores remain sticky, and we know that that is something that the Fed is paying close attention to. So overall, though, this beat expectations, so you would figure that would be a positive. However, there was some news articles that came out that day kind of hinting at what maybe the Fed was going to look to do on Wednesday. So we'll get to that here in a second. And then May PPI, so the producer price index. So that's, the producers, the people that produce the goods that we buy. That came in amazingly good. If we take a look at that, we can see that dropped all the way down to 1.1%, the headline number. At one point, I think it was over 11%. So that's a good sign because it's forward-looking indicator. If the price to produce goods is going down, then the price to buy goods for us as consumers should be going down in the future as well, which helps overall inflation numbers. And one thing to keep an eye on here, every time we have a big drop in these numbers, there's usually a recession. And this is a big drop, and no recession yet, but that's something to keep an eye on. Next thing we got was the Fed meeting. So this is the big news of the week, thing we were all kind of waiting for. So they paused as was expected, but it was a hawkish pause, which means that they were in their statement. They made some pretty aggressive statements about more hikes in 2023. So let's take a little closer look at these numbers. So currently the Fed funds rate is in between 5 and 5.25%, and 9 members now are indicating, according to the minutes or according to their statement, that they would want to do 2 more hikes before the end of 2023. So that would put the Fed fund rate between 5.5 and 5.75. Core PCE, they upgraded, or they currently is at 4.7. They were thinking it would come down to 3.6, now 3.9 only. GDP, they upgraded from 0.4 to 1%. And then the unemployment rate, they were thinking it was going to be at 4.5% by year end. Now they said 4.1. So basically saying the economy is doing better. Everything is cooking, going along stronger than expected when at the beginning of the year. And then as far as Powell continues to move the goalpost, in the statements, they made a lot of noise about the core part of the numbers being sticky. In July of last year, Powell said that the most important part of the inflation numbers is the headline, because that's what households pay attention to. So they're basically just changing, how they look at things. And they also made mention of home prices have gone up. They got to keep an eye on that. But one reason home prices have gone up is that interest rates have gone up, and that has killed inventory. They thought they would just be killing demand, making people not do mortgages, but they also made people stay in place. People don't want to give up their current mortgages. So by killing supply and demand, home prices have started to go up. So I don't know what they want to do there. They don't like the fact that home prices are going up, but increasing mortgage rates more won't solve that problem. So the next thing we got, initial job claims. So coming out of that report, it seemed pretty obvious that the Fed seems to want jobs to break. They want people to lose their jobs, and maybe that's when they will pause. So at least today we had a positive day because initial jobs claims came in high. Again, they came in at 262. Second straight week at 262, continuing claims continuing to be high. So these are ticking up. It's showing some weakening in the job market. So this was positive news on the heels of that press conference yesterday. And the bond markets had a good day because of this. I think just knowing that it seems like the Fed is saying they'll be data dependent. They'll take a look at inflation. They'll take a look at jobs. And depending on how those go is what they're going to make their decision in July. Like I said, it seems like they're heading towards another raise in July. That's what their statement said. That's what the market reacted negatively to. But they said maybe they won't if jobs and inflation comes down. So this was a good start. Next thing we got purchase apps. Purchase apps were up 7.6% last week, maybe in anticipation of rates coming down. We'll see what they do next week, but in generally, this is still really, really low numbers. In my industry, we need to get higher. For realtors, we need to get this higher because more people that are applying for mortgages means more people looking to buy. Miscellaneous stuff. So today, one thing we didn't like to see, we got retail sales were up 0.3%, really small, but it was expected to come down a little bit. So basically, people stop spending money. The Fed sees this. They say, oh, look, people are spending money. We don't need to slow down. So the more negative things like that we see, the better. When we see a positive here, that means people are spending a little too much money. And then appreciation data. We got another appreciation report showing continues to cook. Everything continues to go up. Like I said, Powell made mention of this, so they're aware. We haven't got Case-Shiller and FHFA yet for April because those are 2 months behind. We'll get those next month. But everywhere, it looks like nationwide at least, home prices are continuing to tick up. And that has a lot to do with, like we talked about, is because there is no inventory. And raising rates is not going to help that. If anything, lowering rates would help that because then people would be willing to give up their current rate and be willing to move. So where does that leave us? Average conventional went up to 6.94. Very, very sad face for me right now. If you told me that CPI would be as expected or better, PPI would be really good, and the Fed would pause, I would have thought we'd be maybe 6.75, like a nice start to a downward trend. Instead, the last couple of days we actually went up, which was really frustrating to see. Today, like I said, with those unemployment numbers, things start to tick down. So let's hope things can continue to go that way. And then important dates. So like I said, PCA inflation, BLS jobs, and CPI coming up over the next month. The Fed's next meeting is July 26th. Right now, they're showing the Fed hiking again, 66% chance and 33% chance they don't. So we want PCE, BLS, and CPI. We want all those to go in our favor, which means lower inflation and not as many job creations, higher unemployment. We need all that to go in our favor to hope the Fed at that point decides that they don't have to hike. And then maybe in the future we do some cuts, but that's what we have to hope for at this point. It's frustrating, I know, but again, there's no perfect time never to buy. So there's still opportunities out there. So if you're on the fence, I would jump in before rates do come down and it gets even more competitive. So everybody have a great weekend. Father's Day, have a great Father's Day. If, like me, enjoy the US Open, do whatever you enjoy, fathers out there. Enjoy spending time with your family. So if anybody has any questions, don't hesitate to reach out. Have a great day, everybody.